I'm Scott Shellady for NakedTrader.com here from the CME Group floors in Chicago on, I think, Wednesday, the 22nd of February. Well, in the ag world, we had a little bit of a recovery after yesterday's sell-off. And if you really want to commit suicide, go back and look at a chart to, I'm going to say the end of September last year. We've had some blow-off highs and some blowout lows, but generally speaking, we've been in a 50-cent range since around September the 30th. So we've had some compression of our implied volatilities, our historical volatilities, and it just hasn't been a lot of fun over there. And until we really break out of this range, we're just going to continue this up and down action until we get some sort of news to give us the impetus to do that. You know, we started off unchanged today. We actually traded negative for a little while, and finally by the end of the day, we were up 8 or 9 cents there. And it's really all because if you just look at that chart, we had some levels that we couldn't get through on the bottom, 626 in May, and it really kind of shut us back up. And once it starts to look good on a slow trading day, it really starts to look good, and that's what's happened. So we had a little bit of psychology take control today, ran us up 8 or 9 cents. But if you take a 40,000 foot view look at this thing, we haven't really gone anywhere, and we're not going to go anywhere until we get some clarity about how we're going to see what this weather does and how many acres we get planted at the end of March. So those are the two real big things I'm looking at. I think right now we're in a lot of white noise. I also would like to highlight the fact that, you know, we've got a little bit of a battle set up here. We've got some camp, you know, bond bulls on one side of the camp, and we've got some equity bulls on the other. And as I'm sure you all are well aware, those two things, you know, those two don't trade together. They trade inversely usually. And so we've got the PIMCOs of the world that think that these rates are going to get compressed and have rates to the work of a QE3, and then we've got others that think we're going to get QE3, and boy, oh boy, our equity is really the steal of the century right now. I happen to be, and it's not really as popular as the other camp, but I happen to agree with PIMCO, and I think that the Fed's setting us up here for no QE3 as these numbers come in better than expected or not as bad as expected, and I think they're going to have these rates try to do the work that QE3 normally would. So what does that mean for stocks? It just means that I don't think that they're that crazily underpriced as a lot of people think out there right now. So keep an eye on that. And then obviously the Greece farcical situation we call Greece and the European Union, you know, they will default. They can't pay the money back. Austerity's taking away their growth plans, and there's nothing that they can do about it now except really come to the realization and get out. But until that happens, we're going to continue with these headlines, and we'll lurch from day to day. But we've got the EU situation, one of our problems. Number two, we've got the possibility of big acres in corn or small, or what we've got going on with our spring planting. And then number three, I'd like to see how this battle sets up going for the rest of the year with these bond bulls and equity bulls. I think the bond bulls are going to win out, but we've got some fireworks coming our way. I'm Scott Shellady for NakedTrader.com. See you tomorrow.